Hello everyone, this is Matthew Frailey with BreakpointTrades.com. In today's video, I'm going to do an extensive technical analysis review of the markets and of course our trading systems. In these weekend newsletters, they're quite comprehensive. We first off do our opening statement, we go over the general market analysis, we do a top-down approach on the major indexes, S&P 500, triple Qs, small caps, getting from monthly, weekly, daily, all the way down to intraday time frames. We look at a few important indicators like the VIX. We'll look at the bond market. We'll look at some major sectors. We'll look at US dollar, crypto, currencies, Bitcoin, precious metals, commodities, and of course, trade ideas. Again, my name is Matthew Frailey. I founded Breakpoint Trades 21 years ago back in 2003 to provide the most advanced technical analysis on the web, as well as my passion, which is mechanical trading systems. We have 21 SPY and ES mean reversion systems with about 90% winning trades. We've had them for many years now, very popular. We have our amazing KISS trend systems, which is a fairly new product, awesome stuff. And I'm going to be adding new systems. Quite honestly, in the future, I may consider spinning off the systems into a separate website, Breakpoint Trades, mechanical systems or whatever. But right now, they're all with the membership. And if you're just on YouTube, you should consider subscribing. Click the enroll button. Our best membership is the 6-month membership, but with about a 40% discount over the monthly. And honestly, you need more than a month really to figure everything out. There's so much information here. Sometimes it can be overwhelming. Anyway, let's get back to this newsletter at hand. I'm going to go ahead and get this. I'm going to start this recorder. We also, for these newsletters, we provide a web-based or browser-based newsletter. So I'm going to start that recording here now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a wonderful weekend. It is Sunday afternoon, about 5:12 p.m. Eastern Standard Time. It is October 13th, and this is the very extensive technical analysis review of the markets and our trading systems. And this is for the whole week from today, Sunday, all the way through the week. Of course, if you're just a YouTube subscriber, we provide 5 detailed newsletters all week, as well as analysis, system trades, you name it. But anyway, these weekend newsletters, if you happen to be new, can take a while. They can be anywhere from 40 minutes to close to an hour. Again, what I don't try to do here with these videos, I don't try to dumb them down and make them short, 10-minute videos. I know that's probably the best strategy on YouTube because of folks' short attention span. I mean, just look at TikTok. You have 1-minute videos. But we don't do that here. We're trying to cover things in depth. This is the place to learn technical analysis, to really get into the weeds. And, that's what I want to stick to. So anyway, newsletter is divided into 6 major sections, as you can see. First, I have my opening statement. We'll talk briefly about the systems here, the KISS systems. Not going to go into it too long, just very briefly. Then I'll move on to the general market, do our top-down approach on the major indexes from the monthly, daily, weekly, intraday. We'll look at some important indicators. We'll look at a few major sectors. We'll look at the currencies, US dollar, crypto, commodities, precious metals, and we'll follow up with some trade ideas. By the way, I did add quite a few trade ideas this evening, and we'll go over those at the end. But like I said, a couple other things in the market, guys. Like I said, long-term uptrend, intermediate uptrend, short-term uptrend. The S&P has made new highs, new all-time highs, while the NASDAQ has not. So that's something to be aware of. Is the NASDAQ going to now push here to make a new high, or is that some divergence that can cause a pullback? We'll see. There are divergences to be aware of on various time frames and indicators. High-yield corporate bonds are also underperforming relative to the S&P, and sometimes that can produce a pullback. We'll see. Again, under a bullish view, we could at least see a minor pullback of a wave 4, or maybe a deeper pullback as a wave 2. Again, this week, the shift focuses to earnings. We are now in earnings season. We had a lot of banks starting to report late last week, and earnings season should go through the rest of the month. A lot of times the market holds up in earnings season, so we'll see if that ends up being the case. And of course, guys, obviously the geopolitical Mideast is a big one. If that were to get out of control, that could be a reason for the market to pull back. One way to spike crude oil and the CPI and the 10-year treasury yield would be if, say, Israel attacked Iran's energy complex and, you had a bigger escalation there. We'll see. Like I said, news this week, not a lot of big news though, right? I think a lot of the shift, like I said, will be on earnings and, of course, any geopolitical stuff. Okay, so let's go ahead and get started here. So the first image below, item number 2. So this image, this is from the KISS systems. As you know, we launched that KISS systems subscription. You can get 20% off by using KISS 20. And again, I'm not going to go way into this. This picture here shows you the high performance KISS systems. These are based on a lot of intraday charts. You can enter your phone number into the SMS area, and it will send you automatic text messages when these systems take a trade, when they set a new stop, when they set a new smart trailing stop, when they exit. You can see an example here on the right, some of the text messages you'll receive. So for example, you could see Friday alert, high performance KISS system, GDX 78 minute is now long. And once you click that, it'll show you where to place the smart trailing stop. These are completely automated. I don't send these out. It was a very complicated thing to set up. These intraday high performance KISS systems have amazing performance. So that comes with that subscription. And you also get everything else from all the daily and weekly. We cover 750 stocks and ETFs on the standard KISS systems, which have been awesome for the last almost 2 years now. So again, that's open for subscription. Eventually, guys, down the road, we have so many systems here. I may even spin the systems off into their own website. We have the 21 SPY and ES mean reversion systems. We have all these KISS systems now. And I'm actually going to bring out 12 more systems, our volatility systems. So we're going to have a lot of systems here. But there's a lot of folks that like systems, including myself, because, there's a lot of folks out there that they love technical analysis. They like making the subjective analysis and trades. But there's also people that are busy and they don't want to do that. They don't want to interpret charts and make their own decisions. They want something that, they could just follow. And that's where the systems come in. And I do that a lot too. It also helps force discipline. The problem with a lot of folks out there, the majority of the masses, the reason why they fail at trading is because of discipline. Successful trading is not about always being right. It's about money management. It's about controlling risk. You got to set stops. You got to be disciplined, and a lot of people aren't disciplined. Well, the systems by their very nature are disciplined. We're also eventually going to be able to add automated trading to this through Traders Post down the road, not right now, not anytime soon, but that'll enable folks to select systems they want and have them automatically traded in their stock trading account. Again, not every broker's supported, but many are that you use. TradeStation, Interactive Brokers, Webull, Robin, you name it. So that'll be something cool for the future. And image number 3, here's a real-time example of one of the high-performance KISS systems. This is Mara, this is MSTR. That is a crypto stock mining ETF, and not an ETF, but a crypto type stock. And you can see, I guess based on a 30-minute chart, but you can see the trades here. You can see where the system went long, basically on September 18th. You could see the initial stop was 129.20, and it moved that stop quite a bit, and it finally exited there on October 2nd. System then went back long on October 4th, and since that time, it's been able to raise its stop 5 times. It is still long, and that trades up nicely. So it's a great example of these systems. And guys, there was some discussion late last week. These systems are not done. I'm never completely finished with systems. I plan to add more improvements to these systems over time, such as profit targets and scale outs and stuff like that. That'll be the second stage to these systems. Okay, let's go and move back to the newsletter at hand. So image number 4 shows the index sector table, what transpired last week on Friday. Friday was a nice day for the market. Dow was up about 1%, S&P up 0.6%. The Russell was up 2%, so it came roaring back. For the week, the major indexes were up anywhere from about 1 to 1.2% collectively. Now, as far as the market sectors, we followed 21 of them here. And out of the 21 market sectors, more were up than not. There were some small down sectors, oil services, XLE energy, retail, and etc. Currencies, US dollar was up again for the week, up 0.56%. Cryptocurrencies, Bitcoin was up slightly for the week. It's been lagging the general market a bit, but if this area is going to go, I think there's a chance for here. There's a higher low in place, and I'll discuss that well below. That's going to be 20, 30 minutes from now. As far as the commodities, the general index DBC was up slightly, 0.2%. Crude oil was up 1.6%. Big drop in natural gas, down 7.8%. Copper down pretty good, 1.75%. Uranium. Now the agriculture DBA was up. Some of the other ags were mixed. And as far as the precious metals, mixed here as well. Gold up slightly, silver down 2%, while GDX, the miners, was up 1.3%. Now, one thing to also pay attention to is the 10-year, 30-year Treasury yield here. 10-year was up 2.3%. Now, if this continues rallying, that could be an issue for the market, guys, so we want to pay attention to that. And the yield curve, I'm not going to discuss tonight. Remember, that is no longer inverted. It was inverted for basically one of the longest in history. That has also been the best predictor of recessions whenever it goes back from an uninverted state or back to an uninverted state from an inverted state. So that's why I do think a recession is coming, regardless of what the pundits on TV keep saying, a soft landing. But again, as I already told you guys, I will be happy, I will be ecstatic to be wrong on that. But I don't think I am, based on history. And item number 5 shows the economic news calendar. Again, not a lot of big items here, but again, the big thing is we're in earnings season. Banks started to report. So if you're trading these big stocks, make sure to check them for earnings. We had a link here on the newsletter. On the webpage version, you can check them. And of course, any geopolitical out of the Mideast. Let's jump to the charts. So first chart below, item number 6 is NVIDIA. And for some reason, I've been showing NVIDIA as the first chart lately, but hey, just keep that tradition. So here's NVIDIA. First off, just a masterclass example of it trading between supply and demand zones. Look at that. We had these drawn in advance. We had the small demand zone here, which it found support at in early August. We had the supply zone there where it stalled at there in August on an initial rally. I pointed out this coil pattern, and I pointed out the bullish ABCDE coil. By the way, guys, here's a nice educational topic. True coil patterns are 5 waves, ABCDE. Okay, this was the bullish labeling. Wavy typically is a higher low within the coil. Notice it found support at those moving averages. Broke out of the coil. Now it's still in a little supply zone here, right at the top of it. So that still is resistance for now. Otherwise, the highs aren't too far away from there. And chart number 7, here's a 60-minute chart. You can see how this has been playing out. There's a little MACD divergence here just to be aware of. Again, we'll see how this works out early this week. And moving to the major indexes, chart number 8, here's the daily view of the 5 key major indexes. Early last week, I was pointing out the Bollinger Bands were pinching, and that usually precedes some sort of decent move. And you can see we had a nice rally late in the week with those pinching Bollinger Bands. Again, the S&P and Dow made new all-time highs. Dow closing above its upper Bollinger Bands. The NASDAQ is still lagging here. And of course, the Russell is as well. The Russell here is potentially coiled up. Potentially could have a 5th wave move up. If the market holds up here and doesn't have a nice pullback correction, I think the Russell could be the place to be. We need to see rates starting to pull back, though. That'll help that. And moving on, chart number 9. Here is weekly charts of the major indexes. By the way, these are the KISS systems. So the KISS systems, in addition to those high performance intraday timeframes and daily, we also have weekly. What would a weekly KISS systems be like? I would call these paint dry systems. Kind of like watching paint dry, because these trades can last sometimes 1 to 2 years at a time. But that doesn't fit my trading style. May not fit your trading style, but there's some people that might. Retired people, folks that really don't want to look at the market much, but they still want some sort of protection with the smart trailing stops, and that's what these can provide. You can see the Dow had a new smart trailing stop last week, moved up to 393. One thing to point out here, the triple Qs, remember they haven't made new highs. Notice we have the ATR resistance approaching, so that's resistance. Oh, another thing to point out, guys, look at the DeMark here. DeMark sequence. We have a DeMark 9 on the weekly S&P and on the Dow. Doesn't mean we pull back from there, but sometimes you keep going, but sometimes you do pull back. So be aware of that. Next, number 10, here's the daily KISS system. This is one of the daily high performance system. And again, it's traded very well this year. Went long last November, basically last year in late October, just off that bottom. It's traded like a fiddle. Okay, and you could see it got out there in July on that correction. Then it got back in shortly after at lower prices in August, and it's been long since. We had a new smart trailing stop. It jumped up to 56 last week, or 56, 60 if you wanted to round that up, whatever. Moving average ribbon, I talked about this squeeze pinch about a week ago, said that would be what was bullish, and that ended up producing a nice move up. We did get a pullback from that DeMark 913 combo. Wasn't much of a pullback, right? But it did produce at least a pullback. You could see that DeMark 913 combo has been pretty good. Again, if you don't know what DeMark sequence is, best for you to Google that and look it up instead of me trying to explain it here on this newsletter. But it's widely followed by institutions, etc. Next, image number 11. Here's the 4 time frames. Daily up here, upper left. Again, one thing to note, there's a little A here. That's amateur buying, just lighter volume, so be aware of that. We have a little end of bull cycle here on the half day. Just something to be aware of. Again, the ATR is support on all these time frames now. Moving back to the standard chart. So here's the monthly view of the S&P, which is up 0.9% so far in October. Again, this shows you the bigger picture, guys. And this is sort of a system chart as well. What I mean by system chart, these 14 link stochastic. Okay, whenever it's above 50%, you tend to be in bull markets. When it falls below 50%, you're in bear markets. Notice how that kept you out of the tech bubble crash from 2000 to late 2000, early 2003, and that it kept you out of the 2008 correction. You see that? And when it's above 50%, you're in bull markets, and pullbacks to the 50% area tend to be pullbacks in that bull market, right? This did fall below 50% 2022 during that bear market, and then it quickly righted itself, went back up. You can see we're in this uptrend channel from the 2009 bottom. So 15 years now we've been in this trend, secular bull market. Perhaps one target over time would be the upper channel line. That said, guys, eventually this secular bull market we're in, secular bull markets usually last anywhere from 15 to 21 years or so. So just something to be aware of. Next, number 13, here's the weekly view of the S&P, again up 1.1%. Notice this uptrend channel. Notice we got a new demand zone down here. You can see the demand zone we bounced off there in August. We got a new one here. And we're just continuing to uptrend. That said, we do have this divergence on the RSI and the MACD. Divergence is not a sell signal. This has been in place, but it is something to monitor. Next, number 14, here's a clean half-day chart. And this is a chart I was shown about 2 weeks ago when I did the weekend newsletter. So I talked about this area, this high in July being major support, and it was. So that little pullback we had in early October, you could see price found support there and rallied off of it. Next, number 15, here's a standard daily view of the S&P 500 cash. Again, you can see the wave 3 high in July, that ABC 3-wave pullback, wave 4 into August. By the way, guys, another education. ABC pullbacks and uptrends are corrective patterns. They're bullish. Whenever you see 3 waves in an uptrend, that's usually a good buying opportunity. All right. Anyway, we've been trending up. That previous high became support. This appears to be perhaps some sort of wave 3 up here. We'll see. Again, there's various counts you can break down. I'm not going to get too bogged down into that, and neither should you. Next, number 16. Here's another daily S&P. Shows you this kind of leading diagonal that's been forming. Been showing this for the last couple weeks as well. Number 17, here's another half-day chart. So been working on this. One thing to watch here, we do have a potential little wedge here. You see the little 1, 2, 3, 4, 5. Just like coil patterns have 5 waves, wedges do as well. So this is something to watch. We do have some MACD divergence. Here's another education. True wedge patterns always have MACD divergence. If they don't have MACD divergence, likely the wedge is not complete. So this is definitely something to be aware of that could play out for a pullback very soon, early this week. If prices blows up through here, then it would negate it, but for now it's there. Chart 18, here's a 60-minute view. Shows you this wedge here on the 60. Again, this is what has me a little bit cautious here in the short term. Chart 19, just breaking down some of these counts again, guys. If you don't understand it, don't worry about it. Don't get bogged down in it. But I know some folks who like us to give our opinion on these, so here you go. So kind of broke this down into smaller time frames. So we could have a little wave 5 of 3 here. Soon we get a little wave 4 pullback, then another move in a 5 is one option. Chart 20, here's a 2-hour view, shows you the similar thing. We could be to some sort of little minor wave 3 here, get a little 4, then a 5 up. And chart 21, yet another view. One way to view this could be completing a wave 5 of 1. Now that would be the super bullish view, guys. Then you'd get a deeper retracement of a wave 2, and then you're off to the races. Again, we'll see which one plays out ultimately. And chart 22, here's a 15-minute view. So note we do have a little MACD divergence here. It'll be interesting to see where futures open tonight. They should open here during the recording, and I'll comment on those. Next, chart 23, here's the Triple Q's KISS High Performance Daily System. Okay, it's traded very well as well. Again, it's been long. Current stop is smart trailing stops 467. ATR is support. By the way, there's the weekly ATR up here in red, so we want to keep an eye on that. That is a good resistance area. We do have a slight MACD divergence here as well on the daily. Again, Qs have lagged. Now here's the intraday time frames we like to look at. Here's the daily up here. Again, ATR is support on all the time frames. One thing that stands out to me is the DeMark 913 combo here on the half day, and you have a resistance in the bull cycle here, resistance cycle, and you have one here on the 130 minute. So could be a logical reason for a pullback. Next, chart 25, here's the weekly view of the Qs, up 1.25% for the week. Again, it still hasn't yet made a high, new high. Chart 26, here's the daily. First off, we filled that open gap last week, which was a magnet. That is filled. You got another little supply resistance zone right in here. You do have a little RSI divergence, and otherwise short-term supports the 9 EMA, then the 20, and then of course this uptrend line and demand zone down here. Chart 27, here's a half-day chart, just shows you the same thing. Last time on that little pullback, we bounced right off that demand zone that we had. Now we're into a little supply zone. And there is some MACD divergence here, you can see that, and RSI divergence. Chart 28, here's a 60-minute view. Again, kind of like the S&P, perhaps this is a wave 3 up here. We could get a wave 4 pullback at any time. In chart 29, here's a 30-minute view. Finally, moving on to the small caps, IWM. So here's IWM. Finally broke this little tight channel that I had drawn in place over a week ago. So if one is long here, I think an easy stop could be just below this 214.60 higher low. Okay. Again, if the market doesn't fall to bed here, have a nice correction, I'm looking for the small caps to outperform and this to make a new high in a wave 5. Okay, that's if everything goes okay. That's if rates don't keep going up or Mideast situation spikes. So we'll see, but I own a long position in here now and I got to stop. And chart 31, here's a 2-hour view. You can see it held that demand zone last week. Took out a little downtrend line on Friday. We'll see what it does this week. And that does it for the major indexes, guys. Now let's go ahead and shift over to some of the major indicators that we like to follow. First off, chart 32, here's the VIX, Volatility Index. As you know, this moves opposite to the S&P 99% of the time. This is also a mechanical system with Bollinger Bands. You have the rules here, but essentially, whenever the VIX closes outside the upper Bollinger Bands and back inside, that's your buy signals. When it closes below the lower Bollinger Bands and back inside, that's a sell signal. Now notice we haven't had any sell signals this year. Everything's been buy signals. Some of them only produced short-term bounces. Some of them were major bottoms. You can see last week the VIX was outside its upper Bollinger Bands, closed back inside. That was on Tuesday. That produced a nice buy signal, at least for a few days. Next, chart 33, here's a 60-minute view. This focuses on these gaps. The VIX really likes to fill these gaps, even more so than the indexes. So we filled all these previous gaps. We still have this unfilled gap here. Here at a little channel, MACD's recycled back to zero. So if the market wants to pull back, this could flag out. But if should the market continue to rally this week, I would look for a fill of this gap because it remains unfilled. Next, chart 34, here's the S&P 500 McClellan oscillator. This is also a mechanical system. Whenever it closes below its lower Bollinger Bands, that sets up a mean reversion long trade. And we got this last Monday. That was a heck of a trade. Look at that. You can see sometimes it needs 2 or 3 days below, but sometimes it only gets 1 day, and that's what that was, and it'd be a nice buy. Congrats if you took that. Next, chart 35. Here's one I haven't shown for a while. This is the PMO buy all indicator. And it's kind of a breadth indicator as well. But when this typically falls from an overbought to below 66% here, that can give you a sell signal. And it is below here. So right now, this is giving a little warning for the market to be aware of. And finally, chart 36, here's the S&P 500 versus high-yield corporate bonds. The two tend to be highly correlated. You can see they move together. What you want to pay attention is when you get divergences, like you have back here, or you had back here in October of last year. Higher high on high-yield corporate, lower high in the S&P. That marked that bottom. You marked a little top there in July with that divergence. And right now we have another divergence setting up. We have a new high in the S&P, a lower high on the high-yield corporate. So that's something that concerns me a little bit as well. Now, this could be negated. Remember, should high-yield corporate just rally and make a new high here, this divergence is lost. But for right now, it is there and something to be aware of. Chart 37, here's a 60-minute view showing the same thing. Next, moving on to the bond market, chart 38, here's high-yield corporate itself. Right, it's had a little pullback from the highs. We got a bigger demand zone down here, which we haven't tagged. Doesn't mean we won't. And you have the 50-day moving average. Moving on to rates, chart 39, here's the 10-year Treasury yield. Remember, we pointed out this MACD divergence back in September, and it's had a good rally there. Got over the 38% fib. Notice there's a big supply zone up here in the 50% fib. Honestly, for the market to continue rallying here and for small caps to go, we really need to see a reprieve here in rates. If the 10-year yield continues higher, that may start to spook things, so be aware. Chart 40, here's the weekly view. Months ago, I postulated this ABC pullback from that 5% high in 2023. And so far, that ABC has played out, right? Notice it bounced right off that demand zone. That said, if rates are going to go to another high, then that would be bad for the market. That said, it's possible this could rally up and inform a lower high, come down again. Notice the moving average ribbon is bearishly stacked right now and pinching a little bit on the underside. Also, that last low had RSI divergence. Finally, moving on to some market sectors, just to show you what things look like instead of just the indexes. So here's XLK technology. So by the way, this gap was filled. Remember, this was a magnet, finally filled last week. So, we'll see now if this can push higher or not. This has not made a new high. Chart 42, here's the semiconductors ETF, still in this supply zone, and this one hasn't filled that gap above. So should the market rally here, I would be targeting at least that gap since we never filled it. Next, chart 43, here's transports. Man, transports had a big breakout on Friday. Look at that move. Remember, it held that support zone I talked about, this uptrend line, the moving averages, everything was bunched up there. Boom, big move. In fact, you may want to look at some trade ideas in the transport sector. I meant to look at this before I started recording, I forgot. But I'm going to look at that after this, and if I see some good ideas in that sector, I'll post them in the trading community. But this looks great. Next, chart 44, financials. Remember I pointed this out a week ago that looked like an ascending triangle? Broke out on Friday nicely. Nice pickup in volume. MACD had recycled back to zero. Now we could set up a MACD divergence here, but for now, nice little breakout. Chart 45, here's the bank sector. Remember, I've been pointing this out is a bullish ABCDE 5-wave ascending triangle. Well, this finally broke out last week. And honestly, this looks higher to me. Next, chart 46, XLP, consumer staples. This is a defensive sector. It was rallying. This finally did pull back, though, pretty nicely. So that's good to see. Oh, these charts got out of order. I apologize, guys. I covered the banks and financials. So here's some that I put out mid last week as long ideas in the financial sector. Here's FAS. That's the triple long ETF for financials. I pointed out this textbook coil pattern. It actually triggered on Wednesday slightly. Hope you guys bought it. Big move on Friday, up 5.5% on expanding volume. Looks great. Chart 48, KRE. That's the regional bank ETF. It's in an ascending triangle or a symmetrical type triangle here, and has not yet broken out, but it had a big rally on Friday on good volume. This still looks really good. And chart 49, KBWB, another bank ETF, ascending triangle pattern, textbook. Broke out beautifully on Friday. It triggered on Wednesday, though. So those of you who are subscribers to our website, you could have saw these. If you're on YouTube, you may not have seen these. Again, that's a reason to be a subscriber, because you get all this information, whereas on the YouTube videos, there may only be a couple YouTube videos a week. Looking at some other sectors, XLI Industrials. This sector continues to rock and roll. Really strong. Chart 51, real estate. This has pulled back lately. There is a little supply zone right here. Notice you have the 50-day moving average in red. If this is lost, you have another supply zone or a demand zone below. Next, chart 52, utilities. They've pulled back over the last couple weeks. Little bounce on Friday. There is a demand zone here where it's trying to bounce. Next, chart 53, XLE Energy. Nice move up. So far, I can only count 3 ways up, though. But again, this could morph into other things, such as a fifth wave pattern. It could move into a bullish 1-2-1-2. We'll see. Or it could be a bearish ABC. But we'll see how this develops, and the Mideast situation could affect this, obviously. Next, chart 54. Here's the Chinese ETF, FXI. As you know, that market went crazy. Yeah, first off, you get an inverse head and shoulder pattern, which we pointed out. I pointed out many times. Then you had that news where the Chinese government was going to prop up their markets. The thing went crazy. Then it came down to earth. And honestly, I'd be careful with this, guys. To me, I only see one wave down. I think it needs at least maybe a C down before I'd even think about touching it. There was also some news that came out over the weekend on the Chinese market about their stimulus that could be negative, so you may want to look at that. And chart 55, here's a leveraged play. That's the triple leveraged ETF. Same deal. Had a hell of a move, but hopefully you took those profits. By the way, the KISS High Performance caught this move, but it then got stopped out on the gap. But that said, guys, it still made almost 80% on that trade. And for the subscribers, I sent out an email when it was up here saying, hey, the trade's up 150, 160%. You may want to consider taking some off the table. So hopefully some of you did, and system got out then on that gap down. Next, chart 56. Here's Baidu, one of the Chinese ETF or stocks. Now, I just want to point this out because it obviously had a big move up. It does look like it could flag here a little bit, so you may want to keep an eye on this over time. I still think it's a little early to buy. Here's a zoomed out view of Baidu. Again, you can see the bullish volume patterns, the light volume on the pullback. There's a gap down here, so I'll be monitoring this one for potential buy. Next, let's move to commodities portion of the newsletter. Here's DBC, the weekly, up slightly, like I said, 0.2%. So far, the last month, it's rallied off that lower channel line, still in the midst of the channel. Next, chart 59, here's crude oil. Weekly view up 1.6%, kind of still in this wedge-like pattern. Chart 60, here's crude oil on the daily. The big resistance is this downtrend line. And again, anything crazy out of the Mideast could, obviously cause crazy spikes on crude oil from an obvious standpoint. Right now, the 200-day moving average is a little bit of resistance. Next, chart 61, here's UNG, natural gas. First off, pointed out back here and on the wedge and that double bottom, that was a great trade percentage-wise. Okay, but you needed to take profits at the 200-day moving average. As you can see, the last 5 tests all stalled at the 200-day moving average, including this one. It's been perfect. That said, it's down here at the 50-day moving average. This could be a support area, an area to nibble. Let's take a look. Here's an intraday time frame. Chart 62, 60-minute chart. First off, notice that rising wedge you had in place. So that's why you got that pullback. There is a big demand zone down here. I spelled zone wrong. Zone. I don't even know how to say that. Anyway, but something to watch here if you get a trigger. Next, chart 63, copper, up 1.45% on Friday, down for the week, of course. It did bounce, though, off this demand zone that we had in place. And, of course, this completed just a textbook perfect ABC 3-wave at that August bottom, which I pointed out to subscribers ahead of time. Next, chart 64, here's DBA Agriculture, up 2.2% for the week. Nice move. Remember, we had that completed ABC back in July, then it made a new high. We had that cup and handle earlier in the year, which played out. It's been an excellent trade. And by the way, we have a high-performance KISS system of this, which has been knocking it out of the park. Chart 65, here's the monthly view. Shows that kind of monthly flag. You can see when the bull market started and DBA was back here in this 2020 trendline break. And targets over time could be these upper demand zones. Next, chart 66, here's the daily. Again, it had a little blow off there, spike a few weeks ago, pulled back, but it did find support into this demand zone where it's found initial support. Next, moving to crypto, chart 67, here's Bitcoin. Now, this is the weekly chart, but I'm showing this just because we've had this labeling in place for a while. That pullback in July is a wave 4 into the demand zone, and we're working on this. We're still in this expanded coil pattern, haven't broken out of it. But if this is the correct labeling, I would expect an eventual breakout for a wave 5. Okay. Now, how to play that? Obviously, you can play Bitcoin itself. I'm sure quite a few of you own Bitcoin, but if you don't, you could trade the ETFs. BITO's one ETF. Again, needs to clear this downtrend line, but right now, I'm long some. I got to stop right at that higher low. You have a little ABC potential. Here's one of the newer Bitcoin ETFs, IBIT. This one actually has a little bit more volume. 33 million shares it traded on Friday. Nice pattern. And if you want some leveraged, BITX, that's the 2-time leveraged. So there you go, similar patterns. Next, chart 71, MSTR. Of course, some of these Bitcoin stocks like this one have really rallied. This one owns a lot of Bitcoin, so it does well when Bitcoin goes up. But man, big move on Friday, up 16%. By the way, the KISS system has been long this, catching that move. Chart 72, Riot. Here's another crypto stock. This is more of a miner. A lot of the miners haven't done much, but you got a nice little base here. 850 is your resistance. Maybe you can get a trade out of it. Moving on, chart 73, US dollar. First off, the US dollar's had a big move off that low. Remember, we talked about the 5th wave divergent bottom there in late September. You had MACD divergence. You had clear 5 waves. Another education, guys, whenever you have clear 5 waves, either up or down, look for some reversal, especially if you have a divergence in place. This is played out. That said, it's now well into this supply zone. The hope here is we get a pullback soon, but it's had a nice move up out of there. Chart 74, here's the weekly view, up 0.4% for the week. Again, it did rally off near that big support zone. That said, is this some sort of wave 4? We'll see. If it's a wave 4, it can't overlap the bottom of that wave 1, so something to monitor. And chart 75, FXY, Japanese yen. I haven't showed this for a while. This gave us a great trade out of that wedge for 3 months. It's pulling back now. That said, I think this could form a higher low. So this is on watch again for me for another buy. That would mean the dollar would come down again ultimately as well. Now let's move to precious metals, this has been a great year for gold. It's up more than the S&P. So this is the weekly view. Been parabolic essentially. You can see the parabolic. Eventually this will end with a nice correction. I still favor this as a wave 5 of 3. Once it ends, I'm looking for a deeper wave 4 pullback, but that will be in the midst of a bigger bull market. Jabber 77, here's the monthly view. Again, you can see this ascending triangle, cup and handle. You can see we're clearly in a wave 3. So when we do get a wave 4 pullback, I'm looking for a higher low. Then I'm looking for another new all-time high in a wave 5. Again, we are getting quite stretched on this monthly chart. Look at these RSIs now. But again, my ultimate target for gold is well above 3,000. Again, are you shocked with what they're doing with the BRICS nations, with how everyone else is spinning like drunken sailors and etc. So, not surprising, guys. And Jabber 78, here's the daily view. Now, gold did hold this little trend line here, just barely last week. Could be a little flag. We'll see how this works if this wants to have another pop to a new high. Next, Jabber 79, silver. Still holding up around here, just chopping around. I love the longer term chart, of course. And let's look at that. So Jabber 80, here's the monthly view of silver. Again, you had a 4-year textbook coil pattern, broke out early in the year. And it's been struggling in this supply zone, but I do strongly think that eventually it goes to that next supply zone over time and even tests the all-time highs and break them. Next, Jabber 81, here's palladium. Weekly chart up 5.85%. Remember, I talked about this basing pattern a month ago. It broke out, pulled back a little bit, but this still looks really good to me, guys. First target would be the first supply zone up there. That's still a pretty good percentage move, and then you got your next target up there. That would be a 50% move. Look at your moving average ribbon. Look how tightly wound it is, and it's starting to pinch higher. It's starting to cross to the upside. And finally, chart 82, here's platinum, monthly chart. Ultimately, it's been lagging. You can see it peaked out in 2011. It's in this multi-year coil pattern. So something to monitor over time, but definitely nothing that's going to trigger anytime soon. Now looking at the mining stocks, Jabber 83, here's GDX weekly, up 1.25% for the week. It did have a nice pullback there. Remember, we had that shooting star doji candlestick 3 weeks ago, and that did produce at least a pullback. Now we'll see what this does. Jabber 84, here's the monthly chart. One target over time could be this next supply zone. Still ways up there. And Jabber 85, here's GDX in the daily. It pulled back from the upper trend line 3 weeks ago. So far, it's bounced off that trend line and 50-day moving average. Should this area fail, then your next support would be the lower channel, parallel channel line. Jabber 86, here's Newmont. I'm not going to go over a bunch of individual ones as we have plenty of charts here. You can see this finding support near the 50-day moving average, breaking a little trend line on Friday. And chart 87, GGN, here's a precious metal gold resource stock that pays a monthly dividend. Pays roughly an 8.5% annual dividend. You can see the monthly dividends. It's only 3 cents per month, but again, with the stock price, that's roughly 8.5%. And in addition to that, it's been uptrending with the precious metals. It's been a great little dividend play. One thing to watch over time, guys, on these gold stocks would be DUST. That's the 2-time inverse ETF or GDX. You do now have a potential wedge here. That said, this wedge may need to pull back more here within the wedge, but it is something I'm going to monitor. Now, let's move on to trade ideas. So, chart 89, TWG. By the way, this was a long idea of mine a week ago. And, initially, resistance was 222, moved it to 258. Gave you at least a day trade. But, man, if you stuck in it, gave it a little room, look at that move on Friday, up 233%. Now, did I know that was coming? No. But the pattern was bullish, as I said, and it ended up working out. That said, I know some subscribers who took this and sold it for a loss. And I know that doesn't feel good, but, guys, one thing you know on these daily setups we give, I don't put these out as day trades. And if you're going to swing trade these, you need to give them some wiggle room. Otherwise, you don't want to be stopping out on a bunch of noise. And then, because it's frustrating if you stop out on noise here and then the thing goes on and to make 230% in a day. Again, that's rare, but just I'm pointing out, these are made for swing trades. They're not made to, have super tight stops where you take losses, okay? Next, Jarbert 90, YUMC. That's that Chinese play I had back in September that played out awesome, with that market. Great trade. Jarbert 91 Duo. Here's another one, a little low price. I think it was a Chinese stock that I had at 55 cents. It ran up to 467, guys. So it went up ninefold. Crazy now. And it's coming back to earth, but, another idea. Jarbert 92 Net. Here's another one of ours that busted out on Thursday nicely, and nice follow through on Friday. That said, guys, AZ. So I haven't commented on this specifically for a long time, but this is something that Steve and I have been involved with for several years now. I've owned shares for at least 3 years, and it's a fundamental play or one that speculative play. They have a smart shopping cart. It allows you to skip the lines. It's an amazing product. We think this has big potential to disrupt the grocery industry. So anyway, I've avoided posting it, but I was monitoring it back here, broke out of the base, stalled at resistance. You had a nice little trigger back here in September, stalled at that resistance around the 240 area, had a perfect ABC pullback, kind of like a cup and handle. I saw this last week, added to my position, big move up on Friday. That said, I own this for the longer term. I own quite a few shares. I may scale out of some shares here or there. I may look to buy more on a pullback opportunity. Again, this is a personal investment, guys. I am not compensated by the company. All right, I am not affiliated with the company, so there's no funny business there. This is just a personal investment that I think has some potential that I've been in. So, given some of the recent news, which you should check out, I think there's some really good developments here, and I'm hopeful this thing can finally start to take off. We'll see. By the way, there is a Zoom meeting that we set up with the company actually on Wednesday, and I'll probably send that out separately. Again, I have no affiliation with the company. I have no compensation with the company. I'm not compensated by stock or financial or anything. All right. If I was, I would tell you. Next, Jarbert 94. Here's a zoomed out view. Again, this thing was, I got involved with this 3 years ago. The thing rallied up to $29, $30. I made some nice money, but with anything, some of these story plays, I held shares too long, and I was down pretty substantially on this. So finally, I'm up again with this move, but again, I'm hoping it does a lot more of this if their product comes together. But anyway, you could see took out a big resistance here, and you could see another big resistance above. This is going to take time to play out, guys, but it is a company that I'm pretty excited about. Finally, let's move on to some other trade ideas. Jarbert 95, Rocket Lab. This has had a heck of a move. Wonder if Elon's paid attention, and one of his competitors, I guess. Setting up to another nice little coil here. Next, Jarbert 96, CIFR. Nice new little pattern. Nice little inverse head and shoulder coil pattern. Looks pretty good. Jarbert 97, AMSC. Little clear resistance at this 2520. One area to watch. Jarbert 98, ARRY. Nice little basing pattern. Got also a nice little coil there. Moving average ribbon is squeezing. This looks pretty good, guys. One to watch this week for a breakout. Jarbert 99, AMPX. Here's a bull flag setup. Good volume patterns. Resistance 138. Jarbert 100, AAOI. This has just started breaking out on Friday. Though notice there's an open gap back here in the February. That could be a magnet. Jarbert 101, CELH. Nice. This has had a heck of a correction. It was $100 back here. It's fallen all the way to 28. But notice you got a big volume move up on Thursday. MACD divergence. It did pull back logically off this declining 50-day, but I will be watching this for potential flag now. Jarbert 102, Grail. Nice little horizontal rectangle pattern. Resistance right there at 1450. Jarbert 103, ALNY. Kind of an ascending triangle look to it. Breakout idea. Jarbert 104, ARM. Resistance 152.40. Jarbert 105, IBRX. Little wedge pattern. potential base support. And Charter 106 NRGV, nice volume on Friday, up into some supply zone, low price stock. We'll see if it can follow through on momentum. And so there's a handful of long ideas, guys. I put a bunch of these out, and these are good for all week or the next week or two. That said, if the market were to have a pretty good correction, a lot of these may not trigger, but if the market continues, these may go. So wanted to put these out for the week, and we'll see how things happen. Quick check on futures. So ES futures market, they just opened. ES futures are down 5 points. Gold is down 11. All right, so we'll see how that trades overnight. Anyway, have a wonderful rest of your Sunday evening. Thank you for all your support. And if you're on YouTube, if you can, please like and subscribe. Please comment. The comments definitely help the channel. And that's really our only form of advertisement here. We actually don't have advertising really on, we don't have a bunch of, various marketing pages and stuff like that. Anyway, enough of that. Enjoy the rest of your Sunday, everyone. Thank you very much. Take care.